Hi. Just an update post the FOMAC, 17th of September going into the 18th of September in the global markets, Australasia. I'm just looking at the SPX and looking how we trade the SPX using liquidity from being zoomed out right to being zoomed in and day trading or scalping. So one of the things to first pick up is that we get sharp points, and the longer something stays in a selling position, whether you're trading the market on the 1 minute or you're looking at it in the 3 hours, the more likely you are to have a change in direction. So long flats, whether they're on the bottom or on the top, they tell you that you have a build of direction or direction changing that's going on. The interesting ones are, if we've got great liquidity, we can have a look at the market. This is in the day. We can have a look at the market and say although we've tried a couple of times, this was a very interesting one here at the end of February where we tried to do a breakout, hoping that Trump was going to change some of his policies, and he didn't. So we ended up in this long flat period. We've now been a little bit middling the last couple of weeks, but we're now seeing that we've got quite a good bit of buy going on the last couple of days. But we can just see how green this market has been for a long time. This is a regular liquidity, 15 periods. This is time-laid liquidity between 15 and 500 periods, the shorter one being the fattest and the longer time period of normalization being the thinnest line. And all of those details we can look at. They're in here in the different moving average periods. One of the things I always look at to decide how the SPX is going to trade is what's happening with the big mag tickers, and when we're looking at them over a period of time, they do have a good correlation. They don't seem to have a great correlation with the market, and that's because they're being swapped around. We can definitely see here we need to change this since we're in the day period. We need to change this to weeks, and then it ends up being a 3-week average. And we can probably just do the same with that very quickly, just so you know that there is the ability to look at something over a shorter period of time. Oh, it's that one's looking. Is this one looking? Yes, it's looking. So we can see that here, for quite a period, we were under the line. Here, we've basically been under the line. We had one period where we had a change in in August, where there was thoughts about it. But we can see that those changes, we've basically been in a buying market. This is not necessarily a reflection of price or whatever is discovered yet. It just tells us where we are in the market. If I then just quickly zoom in and have a look at closer proximity, a couple of the interesting points between the two, I think is probably, it takes a little while to work out. We can see here that we had a period here where we had a lot of selling in the SPX, and we had buying, the opposite, which dragged the market up in the mag. So what's happening there? Well, it's the end of the quarter. So we have a huge changeover and a restart, and we're going to get that towards the end of the month. And so that will mean that going into October, we might have some volatility from now on. It tends to be a volatile month if we look at it on the seasonally. We have reached up into a slightly, not a high position, but a slightly more sideways position. But we do have the mag being well supported. And while it's well supported, even though individually they might not all be doing very well, while it's individually supported, we definitely are going to see, let's change this back now, we're under the day level. I think that's running on days. So yes, it was just this one here, this liquidity here is on weeks. It's just a regular liquidity. We just have a slightly different measure on it. So we can see we're coming into an OPEX. The other thing you'll notice is that this is the 20th of August. It's coming off the week of the 15th of August, so which was the end of the month. What have we got here? The 16th going into Friday, the 18th of July. That's going to be an OPEX. We can go and have a look at this here too. This is the 31st, this selling period here, this big changeover, is the 31st of March. And then we got this huge drop because it's very hard to hold the amount of selling that is going on and changing of positions, even though if we look across, it's just a bottom, it's fairly consistent with the next month as we've solidified this buying. So we can see here in the SPICs very quickly we saw buying. If we were in closer, we would have seen buying earlier. Very easy to pick tops and bottoms using good indicators, which means that you get those bigger trades than you might otherwise not get. One of the other interesting liquidity is our liquidity sentiment, which really shows us liquidity now as compared to over a period of time that is being shown on the chart at any one time, say in this 2 hours. This shows us that at the moment we're in a reasonably tight period compared to anything since really going back. We've had a couple of periods here. We've had a tight period at the end of June. We've had a tight period going into the end of July. One thing that we can say about tight periods is quite quickly they can become loose periods. Not necessarily here in this June one, but the July one ended up in a little bit of a tussle. We could be in it for a tussle at the end of the month. So the liquidity sentiment is very good. I particularly use it when I'm looking for meme stocks. So if I was looking yesterday, I was looking at SOPG, Sound Group. Oh, I've got it the wrong way around. SOGP, Sound Group. The nice thing about the Sound Group is that it shows us where we have had these incredible differences in liquidity. It just points them out. Here's one over a period of time, and so we can see more green in it. But this was the kickstart here, was whatever happened at this point here. We went from being in the 40-cent bracket to being in the $1.30 bracket, all of a sudden to being in the $1.70 bracket, and that jump really kick-started. And we can see it again here. We've seen it during this buying period here. We've really dropped down into it. And now we're seeing some dropping down into it again. This is a fantastic trade, and this is a great way from a distance to see those trades when we're looking for trades and we're going through looking for medium, long-term swing trades. This is over several months to get that sort of gain, but we were looking at a 4,000% gain. You know, you've come from out at $1 or around that figure up to the $40 mark. And so, you know, if you had $1,000 in it and you were willing to sit with it, your $1,000 would turn into $40,000. It's a very good trade. So that's another one of the instruments that we use out of these liquidity indicators. The big one that I use though is I will tend to, when I'm trading with a group, I will go and make sure that group is supported by other tickers. So I basically use this for trading the SPX. I look at the 5 and the 15 every day to see if we've got some support into the close here. Did we have support into the close? We did after quite a lot of selling. Is that selling going into OPEX for Friday? It may well. Let's just have a look. If we go into the 1 minute and see what it suggests, it does suggest something quite different. It does suggest that after this long period of selling, there was some buying. And this is quite a nice buying picture here, and we can see it again here in the irregular liquidity of the MAG. Again, that's the wrong one. Let's just open up this one here. This is the time layered of the MAG. So we can see again, it had a reasonably good sell, slightly different to the sell that we saw, but this was driving the market. And as we go into Friday, we'll see how that washes out. I haven't yet looked at the data. I know that the SPY is still reasonably well hedged. A little bit of out of the money calls were taken off during the bottom for that particular trade, but some of the hedging was kept going into Friday. So being able to use the groups here, and you can pick your group here. This is what we've got up at the moment. I'm just about to put in the opposites to the Dixie. So at the moment I've got Dixie trades here, Dixie pairs in the futures, but I'm going to make sure that I've got gold and silver and copper and everything there in the Dixie trades. Those Dixie pairs are the FX futures, and I would prefer this. Sorry, this is Dixie FX futures. So that's the dollar CDFs, CFD. Sorry, contracts for difference. Where this is the Dixie pair. So this is the euro, the Aussie dollar, the Canadian, the yen, all of the things that trade and are not pegged to the US dollar. But at the moment, I'm using the mag here in the lit hours because it's the heaviest. It's in the $20 trillion market, something like that, I think, or quite large, as opposed to the SPIX in the lit hours is about a $50 trillion market. So when we have this SPIX index up, that is the biggest market, and that's the reason it gives the clearest liquidity. When we get down into that minute, the beautiful trade was today. We could see this great sideways trade, and as long as you're not seeing, as long as it's staying, it's in a flat place, you know that it's in a trade. So we know that the whole way through this trade, we're in a flat place. As soon as we drop out, as soon as we start to get another flat play, so here we've got into a flat trade, we know we've got a buy on. So if we were doing that in a very low volume market, we can see that we've got a buy on. As soon as it's hit there, we've come out of this sideways market, we've had a little bit of sideways, we're into a flat buy, we've got a flat buy going. It's taken all of this period for it to get back into a flat market. So if we were down there in the 30 seconds, we would have seen that we had a buy going on that went all the way to the flat, into this flat section here. So that trade, as a trade, when we first entered it, these sharp points here, they're not telling us to get out. Oh, somehow I've swapped that one into I'm getting worse and worse here. Do apologise for that. What have I got here? I've got illegal liquidity. Needs to be in its own new panel below. I'll just reset that one. Sorry about that. We can see that these little jagged points, they're not flat tops. You can continue the trade when you've got pointy tops. It's not till you get to a flat top that you need to get out of the trade. It's one of the nuances you need to know when you are scalping, is that you can stay in a trade till it's flat. And look, yes, it has gone even a little bit higher here. But it is irrelevant that it's gone a little bit higher. At the end of the day, we've had a trade that's gone somewhere in the order from when we've hit that buying point until it's flattened at the top. It's gone 40 pips. We've then had a period of flat bottoms. Yes, it's had some spikes, but a flat selling. We've had a period of flat selling, even if we entered it there and we traded it until we had a flat bottom. So here's the start of the flat bottom. We've had an 84-point trade before we started. Well, even if I went back a little bit, overcooked that trade there. Here's the start of the flat bottom about here. So we've got a 68-point trade before you're going to say, all right, I'm blown out of it. This is starting to flatten out. We can see it here, it's flattening out. It's a good trade. And then the up trade again, when we've seen this flat bottom, even if we picked it up from the first time we saw a flat bottom, which is about here, we see a flat bottom. So that price, we've had a good trade up until we've seen a possible flat top there. So we've picked it up to here and we've got a 46 trade back up. If you were trading in the 1 minute, which is what I would suggest, the 1 minute was an easier trade. The one minute gave you clearer trades. I think that you're looking unless you're probably using too much leverage. So you would have got out of this trade earlier, but you would have sold this down until we hit that bit of the trade there. So you would have had a 64 down, and then we've picked up the flat bottom here, and you've had an up until we've hit the top, and we've hit the top there. So what's the price there? It's about. We had a 66 up. Now, if you can stay trading for that period of time, it's not a very long period of time. It's 2 till 4. So there was 2 hours of very valuable trading today. So one of the things that we saw from that is that we saw that we've come into. This is one of the leading things from yesterday, is that we came into the close yesterday with buying. So that very strong buying tells us that we've got this drag that's going to bring us back up. And it doesn't matter whether it was in the SPIX or where it was. We just know that buying is going to be very strong. If we looked at the 5 minute, it gave us the same thing. Very strong buying into the close yesterday. And you can see it here, not as strong in the Mag 7, but it's definitely there. We can see this buying into the close. And that has given us this drive today. So that's another thing to look at when trading indexes. Anyway, I hope that I've given you a rough idea. Just remember, red is selling and green is buying. And remember the difference between flat tops and sharp tops. Sharp tops and bottoms. You don't need to get out of a trade. When we have a trade like this, we've seen the buying going in. This is where we were looking for that trade. It's not the sort of trade that everyone's going to jump at, because we did have a selling period of time there. But if you were trying to stay in a trade and you were in the queues, this would have told you to stay in the queues for that period of time. Anyway, I hope you have a very good day's trading. I'll leave this video. I'm going to call it Trading with Liquidity Indicators. And from scalping to positioning long term. Thank you very much for watching and listening to my long diatribe, and I hope you have a good end to the week.